We had a listing that got 20 offers. 15 of them were CalHFA offers. That is how many people were out there trying to take advantage of this.
That's one house.
A house.
That's one house.
You're not going to know about what these opportunities are if you're waiting until you reach out to talk to the person on your team, your core four, and then say, what do you got for me right now? Well, you might have bought the house earlier had you known that you could. What advice do you have, Christian, for somebody else who's maybe struggling in a situation where they don't have a huge down payment and they're thinking, well, I have to have 20, 30% before I can get a home? Christian Bachelder, welcome to Mortgage Mondays here on BiggerPockets YouTube. How are you?
Pretty good. How you doing, David?
Well, I'm a little sad, quite frankly. There was money being given away for people to use to purchase real estate, and that money is gone. I feel like the kid who got there late to the Easter egg party, and all the eggs are gone, and the chocolate is on the faces of the other kids, not mine. That's how I'm feeling. How are you feeling?
Kind of the same. Assuming you're referring to the CalHFA program that we'll get into in detail in this episode. But before we talk about that, let's get real. Property management will make or break your rental portfolio, but you don't need to be an industry expert to manage your properties the right way. You just need RentRedi. RentRedi is the property management software that saves you time and money by streamlining your day-to-day. Collect rents, screen tenants, list units, sign leases, and even manage repairs all in one place. New customers get 50% off any plan when you enter the code BP Monday. That's BP is in BiggerPockets. Monday is in all of our favorite days. At checkout at rentredi.com. Sign up for RentRedi at rentredi.com and use the code BP Monday.
Let's talk about it. Let's just get right into it. I'm going to rip the Band-Aid off. I'm going to face my wounds. What happened with CalHFA?
Yeah, so for those unaware, this is a California product for first-time homebuyers. They were giving away, I don't want to say giving away, but they were sharing appreciation via a 20% grant for a down payment. How it worked is the government, the state of California, would be sharing a 20% stake equity in your house, and that would substitute in for the 20% down payment you would need otherwise, and you would get a standard loan for 80% of the balance. When you would go to sell or refinance, you would owe the state of California that 20% plus any appreciation that happened. And they were anticipating the program to last longer than it did. It got eaten up very quickly, and in about 2 or 3 weeks' time, the program ran out of funds. I believe that was April 7th is when they announced the program is officially on pause.
So basically, the program would allow someone to borrow their down payment for a property, 20% also. We're not talking 3.5% down, that the government would provide it. And then in return for that, you were giving up basically 20% of the equity in the property, so that if the property appreciated and you sold it, you had to pay back what you borrowed plus 20% of the equity. That money would then go into the program to be lent out to someone else who needed some down payment assistance. And ideally, it would go on forever. But what happened? Why did they run out of money?
In order to have refinances take place and sales take place, you have to fund the money to start. And they ran out of their initial funds, right? So until people start selling or exiting these distributions that were given, the program cannot be reimbursed. So that's why important word here is it's on pause. The program is not over. It's not going to ever be used again. It's on pause currently because they ran out of funds currently allocated for the program until it starts being reimbursed with these future refinances or sales.
So for everyone listening to this who did not know, if they lived in California, that there was down payment assistance available, and they're just now hearing about it after it's too late, much like the late kid to the Easter egg party, what advice do you have for those people?
I'd say first and foremost, we say this every episode, I feel like, but David's version of it's the core four. I usually call it your network, your real estate council. If you guys are looking or even are considering in the next 5 years of buying real estate or investing in an asset, you got to get in the right room with the right people who can advise you. If you weren't set up with a loan officer, if you weren't in communication with a realtor, you wouldn't have known there was free money be given out. I mean, you guys think about it, a standard escrow is 30 days and these funds were eaten up before 30 days. That means people got into it day one because it takes 30 days to close a loan, right? In a lot of cases. So, I mean, the people who were up to date with their lender, up to date with their realtor, had quick pre-approval turn times, and who were ready and willing to go into contract immediately, were able to take advantage of getting a 20% grant, which is a big deal when it comes to buying power of real estate. My best advice is reach out, talk to somebody, get it updated, get information on what's going on in the market so that you can take action.
Yeah, you don't want to wait until it's time to buy the house and then frantically reach out and contact these people that you haven't spoken with in a long time. If you're in the world, you'll hear about the stuff that's going on. Christian and I are frequently trying to create environments where people can learn what loans are going on, what insurance programs are available, how we've created DSCR programs that will help investors, what's happening in different markets. Like in the David Greene team, our agents were talking about on our listings, we had a listing that got 20 offers. 15 of them were CalHFA offers. That is how many people were out there trying to take advantage of this, which is why it ran out of money so fast. That's a house.
That's one house.
So if you're not going to know about what these opportunities are if you're waiting until you reach out to talk to the person on your team, your core four, and then say, what do you got for me right now? Well, you might have bought the house earlier had you known that you could. So build those relationships, focus on relationships. Stop looking at real estate like it's a transactional relationship. I'm here for you and you're here for me. We want to make money and you want to get a loan. No, we have a relationship. We want to see each other win. There's many ways that can happen. What advice do you have, Christian, for somebody else who's maybe struggling in a situation where they don't have a huge down payment? They're in a market where homes are more expensive and they're thinking, well, I have to have 20-30% before I can get a home.
It's a misconception that you need 20% for a down payment. First and foremost, you can buy primary and secondary homes with much less than 20% down. Investment properties are still close to that. So as you grow and scale in your investment journey, obviously you need to bring an increased down payment. But obviously FHA loan can be used once a year. After you refinance out of it, you get another bullet in the chamber, so to speak, to use it again. And if you're a veteran, please use your VA loan. It is the best loan in America, and it's honestly not even close. 0% down, no PMI, 30-year fixed, great rates. If you're a veteran, if you have your allotment, we do VA loans. Reach out to us, reach out to whoever your bank is, whoever it is. The VA loan is the best loan in America. You got to use it. It's for primary residences only, but it is a massively important investing tool if you've done your service. FHA loan is a close second, keeping in the theme of low down payments. 3.5% down on 1 to 4 unit properties as a primary residence. Huge benefit. And to fill in the gap a little bit of what people may have been looking for the CalHFA program, we have down payment assistance options for FHA loans. So if you don't have that 3.5%, how it works in the same capacity, you get your 96.5% first loan, same thing that you would get if you had the 3.5% down, and we have lenders who will give you a loan for that 3.5% as well. Just like I say on every podcast, this is not a program for everybody. I'm fairly against 100% LTV financing. I don't like it, but in the right situations and the right guidance, it could work. And it allows people to get into a situation that may lower their, if you're house hacking, for instance, it's a great strategy for that, where you're just decreasing your living expenses that you would be paying otherwise in rent. Right. So there are situations where it work. But yeah, reach out. We have alternative products that still allow you to get into real estate with low money down for your primary, especially your first home. First time home buyers get a little added incentive sometimes for their first purchase.
And what about a USDA loan? What is that, and where or who are eligible for those?
Yeah, USDA loans are mainly property location specific. They have to be in what are known as designated rural zones. So those are zones outside of city centers, outside of the urban metropolis, right? Usually not places that you want to rental. So these are places where primary homeowners go and buy, typically with a lot of land, things of that nature. Are 0% down payment options available, but USDA, just like we discussed in our previous video, is a fully underwritten conforming loan product. That means debt to income, tax returns, all that good stuff. Can't package a USDA loan with like a DSCR loan, right? Those are two. Make sure you're separating these in your mind. That's also a good loan product. It just is a little bit limited where you can buy. That's the problem with those.
And what if someone's curious, like, hey, I'm looking at this property on Zillow. I want to know if it would apply for USDA. What can they do? Yeah,
USDA has a property lookup tool. If you just you can literally Google USDA property lookup tool and see if it's in a designated rural zone. That would mean that property does qualify for USDA financing. So use that. It's a publicly available service. You don't got to pay for it. It takes 2 seconds to copy and paste the address into the Finder tool.
It is very important to have instant access when you do have a question you need answered before you get it out of your head. So you can hear about programs like CalHFA or the USDA loan or other things like that. So really, really consider developing a relationship with the people that you're using, whether it's your real estate agent, your contractor, your loan officer, your insurance provider. If you're doing designs, that person, your property manager, whoever they are, you need to have an open line of communication with those people because the world is moving at such a fast pace and it's only getting faster. Whatever you're doing, whoever it is, let's say you've got a loan officer that you use the last 20 years, you're loyal to that person. Send them a text message right now. Ask them how they're doing. Ask what you can do to support them. Really focus on that relationship because, man, when these deals come, they go quickly and you want to be the first in line. Christian, thank you for joining me today on Mortgage Monday. Any last words before I let you get out of here?
No, that's good. Action starts the process. Everybody get to it. Text your loan officer, text your realtor. Let's get some action started in 2023.
That's true. This is David Greene for Christian Bigger Action, BiggerPockets, Bachelder, signing off.